Hey everybody, welcome back. Now in this video, I wanted to talk about how smart money and whales accumulate more Bitcoin and other cryptocurrencies through what's called strategic investing. So they'll make use of a bunch of historical, on-chain and other pricing data that's going to enable them to outperform both trading and a dollar cost average investing strategy. Now many of these investors also take out loans during clever times. They'll multiply their gains and minimize their taxes. Now this is a hallmark of how the rich become super rich. And guess what? In 2022, all of these tools are available to you and I. You just got to have the know-how and the correct mindset, and that's what we're going to look at today. All right, if you like this kind of content, please drop a like and consider subscribing. Without further ado, let's dive on in. Alright, so you'll often hear that the vast majority of traders lose money, and most investors are better off adopting a dollar cost average strategy to grow their portfolios. Now this is all good advice. Smart money and whales do one better though by considering historical and on-chain data in order to swoop in at opportune times during bear markets and multiply their gains with the help of cheap loans as well, something we'll go into later on. So rather than buy Bitcoin and Ethereum at regular intervals, it's all about the deployment of capital at strategic times. Now, a great place to start is look into Bitcoin.com, which is a free service providing a bunch of really useful data science charts to help you work out where we are in the broader market cycles and to help you plan your long-term enter and exit strategies. Now let's check out a few of these charts. So we've got the 2-year moving average tool. So here, the green curve, that is the 2-year moving average price of Bitcoin. Historically, the ideal time to accumulate more Bitcoin, and the last signal was early 2020 when Bitcoin was just around $5,000 to $6,000. Now the red curve up here is actually the same 2-year moving average, but multiplied by 5. It just looks a bit squished because of the log scale. Now this tells you where the tops are, which represent ideal times to sell or take profits. Now another useful chart is the Puell Multiple, which is a cyclical oscillator that looks at Bitcoin miner profitability over time. Now, why do we care about that? Well, the idea here is Bitcoin miners are basically compulsory sellers because they need to cover their business expenses, right? So electricity, hardware. So if you're a miner, it's just a matter of when it's a good time to sell your Bitcoin. Now, when the Puell Multiple enters the red region here, we're at a time of peak miner profitability, which is going to drive sell side pressure from the miners, right? The miners are going to want to take profits while the opportunity is hot. While the green region down below here, that corresponds to times when miners are strongly incentivized to hold on to their Bitcoin, right? For better opportunities down the road. As we can see, the Puell market peaks, they correspond to the bull market tops, and the Puell market troughs here, they correspond to the bear market bottoms. Alright, next one up is the popular fear and greed index over time. So the idea here is you want to buy during times of peak fear, right? Here, and here, and consider taking profits during times of peak greed. Now just be aware though, similar to momentum strength oscillators such as the RSI, the index can stay both greedy and fearful for a prolonged period of time. Now if we go down further, we're going to start seeing the on-chain charts. This means we're looking at data from the Bitcoin blockchain. Remember, blockchains are public ledgers, the data is public. So all it takes is some analytics to crunch and aggregate that juicy data and provide insights. Let's check out the 1-year HODL Wave, which tells you the percentage of Bitcoin that's been sitting untouched in a wallet for more than a year. Now when this percentage goes up, say here and over here, more people have been hodling, which reduces the liquid Bitcoin supply in the market, which is going to have a positive impact on prices. Conversely, as the market becomes more overheated, we're going to see more hodlers turn into sellers, which might signal that a market top is imminent. Now, a more sophisticated HODL chart is the RHODL Ratio here, which takes into account some additional things like Bitcoin that's lost over time. Now, what's really nice about the RHODL Ratio is that historically it's been very accurate in predicting the market cycle peaks and bottoms. In fact, it's one of the few tools that didn't provide a false flag signal during the double peak rally of 2013. Notice that the ratio here flashed red during the real top in December 2013 here, and not the fake top in April 6 months earlier, which is pretty cool. Alright, now moving on to TradingView now, where we can easily compare what's going on between Bitcoin and altcoins to try and read market sentiment. Now, a popular chart is the altcoin dominance, which you can easily create by subtracting the Bitcoin dominance away from 100. Now I've also got some additional labels and trend lines that I've added here. Now I can use the altcoin dominance chart to work out when investors and traders are basically escalating their risk profiles and rotating money from Bitcoin into altcoins, with the primary thesis being, look, more money goes into alts when the markets are feeling confident. This is why I've been saying on this channel that the crypto markets, hey, they've been looking alright, because in a real bear market, investors will be tripping over each other to escape their capital out of risk on assets like speculative altcoins. But hey, that's not what we're seeing here, right? We're seeing the broader altcoin space holding consistent highs and higher lows. Another simple tool to gauge market sentiment is to look at the Ethereum to Bitcoin price ratio. So here we continue to see smart contracts lead to Ethereum, which also serves as a bit of an unofficial confidence index for the entire altcoin space, continue to outperform Bitcoin over the last couple of years, right? Again, a sign of a healthy market and that we're not in a real bear market. If you want to go deeper down the rabbit hole, you can check out exchange data from the perpetual futures contracts market, which is becoming a pretty accurate way to gauge true market sentiment because of the large role leverage and credit now plays in the crypto space. I'll leave that for another video. Speaking of credit, smart money and the rich investors supercharge their strategic investing through the smart use of debt. So rather than selling an asset to buy another one, which means a capital gains tax generally speaking, you borrow against your asset instead and take out a loan to buy what you want. And this is how property investors grow their real estate portfolio. They're generally not selling a house to buy another house, they're pulling out equity to buy the next investment property. Now the great thing is in 2022, ordinary folks such as you and I can do this in crypto thanks to a variety of crypto savings and lendings platforms. Now I'm currently using BlockFi, Crypto.com here, Celsius and Nexo to hodl some crypto and earn a 4 to 6% yield on Bitcoin and Ethereum, and even high for other altcoins and stablecoins. Fundamentally, all of these companies offer crypto interest accounts as a core service. But after a large market dump, say Bitcoin is down 50% and altcoins down even more, I can borrow stablecoins on these platforms as well and use that to buy even more Bitcoin and Ethereum. And the nice thing about Celsius and Nexo is that you can borrow up to 20% of the value of your collateral, right? So an LTV of 20% on an interest rate less than 1%, which is insanely cheap, right? Almost free money. Anyway, the markets will then rally. I'll then pay back the loan and pocket the profit. Great, I've just grown my portfolio off the back of my HODL bag, which I used as collateral, crypto, which I ultimately never had to touch or sell or pay taxes on. Now this is exactly how the rich get really rich. And in 2022, ordinary folks such as you and I are fortunate enough to have access to these tools and strategies. By the way, if you want to try out Celsius or Nexo, I do have links down in the descriptions below where you can get some free Bitcoin on your first deposit. Personal opinion, not financial advice, both are great platforms to earn a yield and grow your crypto, but please, please, please watch your risk, right? If you're going to take out any loans, keep your eyes on the liquidation levels. There's only one thing more important than making money, and that's holding on to it. All right, everyone, let me know if you'd like a more detailed video on any of the topics that we've covered today. Please drop a like if you found this video useful. I'd really appreciate it. Until next time, have a great day or evening wherever you are. See you then.